today, I want to talk about how another hedge fund shorting AMC, B. Riley Financial, is about to collapse. I also want to go through AMC's recent Q4 earnings and what was just said on that earnings call. So stay tuned and let's make some money. Later on in the video, I also want to go through today's crazy 360% runner on VANI, where tons of people in the group, like Joe, made upwards of 86% gains. But now I'll dive straight in with the key information. So, as you can see, B. Riley Financial misses the date to repay investors in a collapsed fund. And you can see it says an attack by different short sellers is currently weighing on the B. Riley Financial stock, as the stock is trading far below last year's highs. So it says Brian Kahn, whose role in the collapse of a US hedge fund has drawn scrutiny from prosecutors and battered the shares of B. Riley Financial Incorporated. He's been accused of defaulting on parts of a settlement meant to help repay investors who lost hundreds of millions of dollars. Kahn allegedly run up massive losses before the fund collapsed in 2020. He's also a long-standing client of B. Riley Financial, and the two have worked on multiple deals together, including a buyout of Kahn's retail company in August. It says the default notice adds to the pressure on Kahn and B. Riley, and that's contributed to a more than 50% plunge for the firm's shares in the last 12 months. As you can see, B. Riley Financial is getting tied up more and more into this lawsuit, and their stock price is cratering as a result. At this rate, it won't be long until B. Riley Financial collapses. Now let's also go through AMC's recent earnings call that just happened a few hours ago, and talk about AMC's current position and its position going forwards. You can see in the last few earnings calls, AMC has beaten earnings and beaten revenue expectations time and time again. Revenue has been increasing. It now generates positive EBITDA, which is earnings before interest, tax, depreciation and amortization, and most recently in Q3 became cash flow positive as well. Now what this means, at least for the future, is it means that AMC is continuing to recover, it's continuing to grow, it's continuing to prosper, and it's continuing to generate more and more money. That means AMC as a company will not be going bankrupt. If anything, it's going to become more and more profitable, more and more revenue generative, more and more cash flow generative, and larger, which will ultimately draw the attention of more retail investors, more institutional investors, more value investors, more activist investors, and effectively more and more people backing the shorts into a corner. And you can see from this earnings publication, the Q4 earnings were no different, and if anything, continued that upward trend. We can see total revenues grew quarter over quarter 11.5% to over $1.1 billion compared to less than $1 billion this time last year. Again, adjusted EBITDA increased 193% again for Q4 to positive $42.5 million. Which means total revenues for the full 2023 year grew 23% to $4.8 billion compared to 2022. And again, AMC's adjusted EBITDA for the full 2023 year was a whopping $425 million, which basically means on an accounting GAAP principle basis, AMC makes $425 million of profit year on year. Today in the Millionaire Mindset Trading Group, we traded VANI. I alerted VANI at $2.49, but we'd already been talking about it since $1.70. Either way, it produced multiple entry points and multiple breakouts throughout the morning, running for a total of 360%. As you can see, tons of people in the group capitalized, with Joe locking in 86% gains, Jack locking in $420 of profit, A to the B with a 37% gain, Firefly with 26% gains, and many more. Separately today, we also ended up doing something which we don't usually do, which was to trade AMC call options. It worked brilliantly, and Doc Holliday locked in over $1,000 of gains, and Kevin also locked in over $500 of gains as well on top of that. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below, remembering the 100% guaranteed refund policy. And Adam Aron said that AMC reported strong results for both the fourth quarter and for the full year of 2023, once again exceeding Wall Street's consensus expectations. He said it was another full year of continued meaningful recovery, as evidenced by AMC's full year 2023 revenues and AMC's adjusted EBITDA growing by some 9 times, or growing by 900%. On top of that, you may have heard from the earnings call that Adam Aron not only provided good forward guidance, but also announced a CEO pay cut as well. For those naysayers that say Adam Aron is paid too much to do what he does and doesn't reinvest back into the company, well, Adam Aron has once again proved those naysayers wrong, taking a pay reduction. And Citadel also added, saying to direct your anger at the corrupt regulators, the hedge funds, the clearing houses, the brokers and the market makers, not at the team and the CEO trying to grow the company in spite of all of this illegal activity. We have to remember, Adam Aron doesn't run the stock market, he doesn't own the hedge funds, he doesn't tell the market makers what to do. Adam Aron is just the CEO of AMC, and he's improving AMC day after day after day. And today we have categoric proof of that, with revenue growing 23% year over year and adjusted EBITDA increasing 900% year over year as well. And it seems the shorts are still doing all they can to hold both AMC and GameStop down. As we can see, Kevin Malone has tweeted about Goldman Sachs' securities sold not yet purchased. That figure has increased from $110 billion last year to $250 billion this year. That's an increase of $140 billion year after year of additional securities sold not yet purchased. Again, just another bank, hedge fund or market maker that has this security sold not yet purchased figure spiraling out of control, especially at a time when the wider market in 2023 grew massively in terms of the S&P 500. So really, we should see banks, hedge funds and market makers shorting way less shares of stock, not way more. And the Letter has also tweeted about how interest rates will be remaining higher for longer and how this will result in more banks struggling. We can see the market is now not expecting a rate cut in March, not expecting a rate cut in May, and only maybe expecting a rate cut in June. So therefore, rate cuts aren't expected until at least halfway through 2024, which means at least another 4 months of interest rates being higher for longer. And as this trend continues, we may not even see rates being cut until July or even until September. And if that trend also continues, we may even see one last final rate hike before rates begin being cut. Again, ultimately this just means that banks will still struggle at least for another 4 months, if not longer. And based on that, we may indeed see even more banks collapsing over the next few months. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.